Cryptocurrencies are one portion of the digital asset universe. Digital assets include cryptocurrencies and tokenized assets, including real estate, tickets, art, music, equities, and others that can be viewed as money. Let's discuss some very traditional money and banking economics that describe the current banking system. Later, we will discuss how cryptocurrencies and digital assets have the potential to improve today's global banking system. Our discussion starts with fiat currencies and the history of money. Thousands of years ago, trade relied on the barter system, which did not build the most efficient economy. Those who worked as farmers produced meat, milk, eggs, or grains as their contribution to the economy. Under the barter system, farmers needing clothing must find another participant in the economy willing to trade clothing for the farmer's produce. This barter system has a significant search cost, as participants couldn't always find someone who wanted to take the goods or services they were offering in exchange for the goods or services that they needed. These high search costs caused many farmers to also chop wood and make clothing, and perhaps some clothing makers to grow their own food. People who weren't able to trade for everything they needed would produce those needed goods or services on their own. This was a relatively inefficient way to trade. Eventually, market participants agreed on a definition of money, as it was easier to sell the food for money and use the money to purchase the clothing. This reduced the time it took to search for the person willing to trade for whatever goods or services you had to offer. Marketplaces grew with each merchant selling their goods or services for money in a common location, dramatically increasing economic efficiency and allowing market participants to specialize in the good or service where they exhibited the most skill or enjoyment. The first form of money was based on commodities such as seashells, gold, silver, corn, or tobacco. Of course, once the form of money was defined in an economy, some market participants stopped making food or clothing and set out in search of gold or seashells. Ideally, the commodity money was relatively scarce, but not too scarce that there was not enough money supplied to support the desired level of economic activity. Money is defined as whatever is generally accepted in exchange for goods, services, and debts. Today, fiat money is currencies defined and produced by governments, such as US dollars, Japanese yen, or euros. While gold or corn may have some intrinsic value or use beyond exchanging for the goods and services consumers need, fiat currencies have no intrinsic value. The banknotes and coins only have value because the government says they have value.